You're watching a replay from the 49th Annual Gabelli Automotive Symposium, recorded live via Zoom in Las Vegas. This presentation is shared as originally broadcast. Minor technical interruptions may be present due to the live recording format. Thank you for tuning in.
I'd like to welcome you to the 49th Annual Automotive Symposium, Gabelli Funds. 49th time we have been here in Las Vegas to celebrate the great companies of what was originally the automotive aftermarket, but has now transitioned to more of a pan auto conference. One of the real unique learning events for our space, and really, at least in my view, one of the few true cradle to grave opportunities to understand the automotive ecosystem. We've got a great 2 days for you. We have over 20 companies and 2 sets of industry speakers here to help educate us about all that's going on within the automotive space. And there's no dearth of topics to talk about. Some new companies that are joining us for the first time, and those that have been here for all 49 years in terms of Genuine Parts and Dana. Just by way of introduction, I'm Brian Sponheimer. It is my 18th time running this symposium. Began in 2008, right when the Detroit 3 automakers were going through their restructuring period. So I've seen some turbulence along the way, and have enjoyed this conference every year. Just want to call out some of my teammates here. Eddie Nakamura. Now, this is an automotive conference. Usually when we are traveling 26.2 miles, we want to drive it. Eddie decided that he was going to run the New York Marathon yesterday and make it here today. So we have some we have some brave analysts at Gabelli, and I hope his soreness will abate over the course of the next 2 days. But congratulations, Eddie. Can we get a round of applause for Eddie? I'd also like to say hello to my colleague, Carolina Jolly, who many of you have known for a number of years, who recently gave birth to her 3rd child, her 2nd boy. And I believe she is joining on the Zoom. Some of my other teammates I'd also like to thank, who helped make this day possible. In particular, Trisha Greenhaw and her team. And also we are bringing in some teammates. We have some new teammates here. Nolan Housley, who joins us as an intern out of our Reno office. We like to encourage our analysts and our associates to be with us and understand we can learn as much about the auto industry from Nolan as he can learn from us. Nolan ran a detailing business on his own, so I will be asking him some questions over the course of the next 2 days. So let's get down to some content. This has always been a really unique conference. As the host of it, I'm constantly needing to find new companies to fill the schedule because we've had so many that have been either the targets of merger and acquisition activity or financial engineering. And here's a select group of companies that had either presented here at one point and have been purchased by others, or those in the case of Dana that is now selling its off-highway business. So we've got a lot to talk about there. I'll run quickly through the schedule. Today's more original equipment driven. We'll open with OE suppliers, Gentex, Stratec, and Dana. We'll break briefly for lunch to bring back in here for Sonic, one of the largest automotive dealers in the US. Garrett Motion, which is a really unique OE supplier of turbochargers and other advanced propulsion systems. And then we'll spend some time in the automotive aftermarket. Motorcar Parts of America, which is an aftermarket supplier, is going to talk about factoring and some of the issues that we've seen so far this year there. The gentleman from the Automotive Aftermarket Suppliers Association and the Motor and Equipment Manufacturers Association will present next for what is always a great event to better understand where the automotive aftermarket is going, why Apex is such a big deal in Las Vegas over the course of this week, and where our car population is going. We'll end up with some great companies. Donaldson, which is a great supplier and manufacturer of filtration systems, both for vehicles, also for industrial markets. It's going to speak. Rush Enterprises, which is the largest publicly or the largest Class 8 commercial vehicle dealer in the U.S. will speak then, and then a really unique company in Penske, which has leading franchises for automotive retail, along with commercial trucking, and then owns 28.9% of Penske Transportation Solutions, Penske Truck Leasing. And then we'll finish with NN Inc., which is a really unique small cap company that's doing some great things within the metals industry as it relates to auto and some other industries. So it's a great day. We'll have a dinner tonight in the Left Bank room at Paris Hotel, cocktails at 6 and dinner at 7. I think we may have a slot or two open. So if you are interested, please see our associates outside. So let's get down to the next couple of days. Just to kind of set the table, there are 1.3 billion vehicles on the road globally. In the US, it's about 290 million. And when we think about this car population, the average age of these 290 or so million vehicles is 12.8 to 12.9 years. That's an astounding number when you think about what you see on the road on a daily basis. There are now 65 million electric vehicles on the road in the US, and it's going to be very topical over the course of the next 2 days to discuss the trajectory of the EV market. Right now, we're looking at around 91 million vehicles to be produced on a global basis. That's up a couple of percentage points from 2024. A lot of that is driven by a little bit better production in North America and also in China, but then a real kind of flat to slightly up view for the next couple of years before we get to upwards of 100 million units in 2029 and 2030. The aftermarket, which is where this conference has its origin, is a $400+ billion industry that has grown by over 30% over the last 5 years. And we're going to talk a lot about how much inflation plays into that versus traffic and ticket, and how some of the participants within the aftermarket are able to pass along price to their customer base. Again, we talk about the EV and AI revolution. We spend a good amount of time at this on Gabelli Funds. And clearly, we have seen a drop off in interest in both North America and Europe. If you were to go back to 2023, in the beginning of 2023, the thought was that 45% of all vehicles built on a global basis would be electric, would be battery electric vehicles. So nearly half. Fast forward to October 25, that's down to 34%. So if you think about 100 million vehicles being produced in 2030, that's a full 11 million fewer vehicles that are going to be electric. So the implications of that trajectory on some of the participants here has been massive. We've seen write-downs on some CapEx and some development work within the EV space. And so we'll talk about that. Just thinking though about the aftermarket and how much battery electric vehicles are going to affect the broader collection of that 290 million units. Well, really the answer is not that much. And I think I'll leave it to the gentleman from MEMA to discuss this, but even in a very bullish scenario, you're not going to see battery electric vehicles as a percentage of the overall car population be upwards of 4% until well into the 2030s. So still very much within the automotive aftermarket, an internal combustion engine driven business. We'll talk about autonomous vehicles in what was a hype cycle about 5 years ago that saw a lull. I think we're back into some really exciting development with Waymo and Tesla and some of the suppliers about where AVs are headed, and we'll talk about the impact that's going to have on the automotive aftermarket as well. We're going to talk about trade. Clearly, tariffs on a global basis have disrupted supply chains. They have increased cost to consumers, and in many cases, we've been surprised by automakers' ability to handle some of the costs. And so, whether it is the tug of war between the U.S. and China, or the potential redrawing of the USMCA agreement in 2026, or tariffs on imported European vehicles, it's going to be discussed over the course of the next 2 days. In a focus on the U.S., which is really what some of our companies here, particularly our retailers, are going to talk about. Our automotive SAR, seasonally adjusted annual rate of sales, has been in the 16 million unit level really for the course of the past 2 years. In my view, that's surprising when you see other companies talk about the consumer that is showing some stress. So we need to get to the understanding of really what is transpiring there to keep auto sales what they are. Is it incentives? Is it other? Over the course of the next 5 years, we'll see auto sales get back up towards their more natural level in the 17 million. In my opinion, we have some pent up demand from the 2020 to 2022 period that needs to be borne out, and that's one of the reasons why I believe we'll see auto sales rise over the course of the next 5 years back to the mid 17s. Similarly, North American production, and obviously there's some push and pull as to what comes to North America from an automaker standpoint, but likely an area for some growth beginning in 2027 for some of the with our teammates. We're at about 2.5. Actually, latest reading is around 2.55 million units of vehicle inventory on U.S. dealer lots. That's an okay number. It's about a 52-day supply. Automakers typically have wanted to be in the 55 to 60-day supply range. Mix matters as well, but when there are signs of some bloated inventory, both in the luxury vehicle space, along with some areas like Nissan, which if you read automotive news today, was in a battle with their dealers over what's known as stair-step incentives that are which can be really brand dilutive, but are often used in cases where automakers essentially overproduce their vehicles. So 2.6 is an okay number. We're okay there, especially when you go back to pre-pandemic levels of 3.6 and 3.7, and one of the areas that we're going to consider as it relates to inventory as well is on the truck side, where inventory is naturally higher. Used vehicles, we have seen quite a bit of struggle by some of the used car retailers. Online only retail system for used vehicles really outgrow the industry by leaps and bounds. And to their credit, they've done so in a way where they've also been able to grow gross profit per unit. So we'll talk to some of our retailers here. Sonic actually happens to have a competitor to Carvana in some respects in Echo Park. It's a competitor to CarMax, and we'll talk about maybe some of the successes and some of the issues that they are seeing. Used vehicle values. This has been a topic over really the last 5 years as we saw supply get out of balance with demand. And it's actually not an issue this year. I'm putting the slide up just because it's something that we always talk about, and I don't think we necessarily need to spend all that much time on it this year. Used vehicle values have been roughly flat on a year-over-year basis, just slightly up. Vehicle affordability. That is the average transaction price for a new vehicle in the U.S. now. It's the first time it's ever hit 50,000. And when you hear from companies like Target, Chipotle, et cetera, talk about the consumer Advanced Auto Parts, and you hear of a consumer that is undergoing some stress and strain, how do you tick and tie a $50,000 car with a new car with what's going on there? And there are answers for that. Buyers tend to buy twice as many used cars as they do new, but that's an astounding number and one that we're going to talk about. One area that we look at is average incentive levels, really as a percentage of the transaction price. And so if you were to go back, the orange line up here depicts that incentive percentage as the percentage of average transaction price. And really it was well above the 8% level for the better part of the tens and teens. And we saw automakers drop down once inventory got down to the million to 1.5 million unit range post-pandemic. We're starting to see that number creep back up, but 7.4% of average transaction price is an okay number. But it's something that we're going to be looking at this year, next year, et cetera. We've had some very high-profile bankruptcies in the press. First Brands, which was a automotive aftermarket parts supplier that grew substantially through acquisitions over the course of the last decade. They have been in the news for a bankruptcy that is also featuring what's known as factoring, which is an off-balance sheet debt that effectively automotive aftermarket suppliers need to contend with. And it's one that I think is going to be very topical over the course of today and especially tomorrow. Today, we'll talk to Motor Car Parts of America about it, and we'll talk to the gentleman from AASA and MEMA. But whether there were really cracks in the system or whether the First Brands bankruptcy was one that was really born of just excess M&A. We've also had two bankruptcies within the subprime lending space in both Tricolor and PrimaLend. And we've seen this before at various points where there have been concerns about the auto finance market. And the question arises as to whether these bankruptcies are indicative of something like 2006 and 2007. I don't think that that's the case. I think that lending for subprime is a difficult endeavor if you don't understand the book. But we'll get to the bottom of a lot of these topics. So if we're looking for 2025 and beyond. We are value investors. We want to see what's right in front of us, but also look for what's ahead. I want to thank you all for making the long trip for many of you out to Las Vegas. I know it's not easy during earnings season to be here, but for the 18th year, I truly appreciate having a full room. And for those of you joining on Zoom, I appreciate your interest as well.
Brian Sponheimer is a portfolio manager and Edward Nakamura is a research analyst at Gabelli Funds. This webcast is a recording from the 49th Annual Automotive Symposium, which occurred on November 3rd and November 4th, 2025, in Las Vegas, Nevada. GAMCO is providing these links as a matter of general information. We do not intend for these links to be a complete description of any security or company, nor is it a research report with respect to any of the companies mentioned herein. As of September 30th, 2025, affiliates of GAMCO Investors Incorporated beneficially own 24.44% of Stratec, 10.09% of Rush Enterprises Class B and less than 1% of Class A, 6.44% of Standard Motor Products, 4.39% of Monroe, 3.96% of Dana, 1.68% of AutoNation, 1.17% of Advance Auto Parts and less than 1% of all companies mentioned. The analysts' views are subject to change at any time based on market and other conditions. The information in this posting represents the opinions of the analyst and is not intended to be a forecast of future events, a guarantee of future results, or investment advice. Views expressed are those of the analyst and may differ from those of other GAMCO officers, analysts, other employees, or of the firm as a whole. Because the investment personnel at GAMCO and our affiliates make individual investment decisions with respect to the client accounts that they manage, these accounts may have transactions inconsistent with the information contained in this posting. Certain GAMCO personnel may know the substance of the posting prior to its posting. This webcast is not an offer to sell any security, nor is it a solicitation of an offer to buy any security. Stocks are subject to market, economic and business risks that cause their prices to fluctuate. When you sell shares, they may be worth less than what you paid for them. For more information, a prospectus, or summary prospectus, visit our website at www.gabelli.com or call 800-GABELLI 800-422-355-4914, 921-5100 fax, 914-921-5118 info@gabelli.com.